So that's that's our base case. But my worry is that if the European leaders, in their delusional thinking, actually do decide to move in to support Ukraine, then it's quite possible that what we will have will be a global recession, despite what central banks and governments will try to do. The forces from the private sector will overwhelm what governments and central banks will try to accomplish. So I have to say, and I have to admit, that the path ahead, I've not yet decided which one is going to materialize. So either we get a more imminent collapse, or we get a 2-odd year breathing space before the collapse.
Hey everyone, and welcome to another episode of the What the Finance podcast. On this episode, I have the pleasure of welcoming back a very popular guest. He's a very popular macro commentator in the field, Simon Hunt. So Simon, thanks so much for coming on the podcast again.
Well, thank you for having me. I'm honored.
No
Maybe you guys won't appreciate me being on air after what I have to say.
Well, I think that's why people like you, because you maybe say the comfortable, non-conformist things that people don't like to hear, but a lot of the times they're important to hear. But I like to start where I start every sort of interview, and I'm sure we'll take it in many different places after that. What are you currently seeing in the macro? What are you focusing on at the moment?
I think the big focus, if it's not there, should be on the SCO meeting in Tianjin, followed by the 80th anniversary of China's ending of World War II. Look who's going to be there. And then a couple of days later, the start of the Vladivostok Forum, which is attended by thousands of business people looking at the development, particularly of the Arctic and the whole of Eastern Russia. These events are, I think, going to have a bigger influence than Trump's Alaska summit. It's bringing together 3 countries of significant size and importance: India, Russia, and China. The escalation of oil tariffs on India has thrown Modi, who was doing a sort of 2-step dance between BRICS and America, is now doing a quick step into BRICS. And looking at the videos of the SCO meeting, body language was very strong. And what you have coming together is China's manufacturing capability, China's vast, still largely untapped consumer market, Russia's military strength, and India's emerging consumer market and manufacturing capability. So you've got the three countries with complementary assets coming together and forming a group of countries that are opposed to America's unilateral, dominating view of the world. So that's what's on my mind at the moment. And then if you look at the economic side, it's quite clear that finally the official data is beginning to support what the hidden data has been telling us for the last 4 to 5 months, that America is actually in recession. And the pressure on the Fed to cut rates, probably justified in some respects, but the manner in which it was done is going to cause issues within the financial system. I think that what you're going to see is macro liquidity being withdrawn, which will emphasize recessionary trends in the coming months, at a time when Europe is marred in debt and has electorates that are completely dissatisfied with the power of Brussels. And you have the immigration problem. So the EU3 leaders, UK, Germany, and France, want distraction. And distraction will probably come in the form of supporting Ukraine in the war with Russia. I think this is a real risk which will emerge before the end of this year. And when, if that does happen, the consequences, not just in Europe, but globally, could be massive. One reason is that there'll be the initial flood of funds leaving Europe, followed by capital controls. What will be the consequences globally, given the interconnection of funds via the banks? So once this happens, forget about growth in Europe. It will likely cause a deeper correction in equity markets sometime before the end of this year. What will be followed? Well, inevitably, there will be the attempt to kick the can down the road once more. Problem is, we're coming to the end of that road. this is probably the last time that they can. So we will see growth resuming around middle of next year, probably with inflation rising faster than real GDP, which will then inevitably lead to long-term bond prices, such as 10-year treasuries, having corrected from around the 4% at the moment to 3% by the middle of next year, then beginning to accelerate higher because of inflation. The bond vigilantes desiring a real return on their investment. So we'll probably have a 2-year stagflation stroke inflation recovery, which will peak late 2027 or 2028 with US inflation, or should I say reported inflation, over 10%, and globally as well, all reminiscent of what we saw in the 1970s and early 1980s. And if you see a chart, it's tracking what we saw in the 1970s very closely. So what does that mean for 10-year Treasury yields and other long-term yields? They'll be in double-digit figures. What will that do to an indebted system? So that's our base case. But my worry is that if the European leaders, in their delusional thinking, actually do decide to move in to support Ukraine, then it's quite possible that what we will have will be a global recession, despite what central banks and governments will try to do. The forces from the private sector will overwhelm what governments and central banks will try to accomplish. So I have to say, and I have to admit, that the path ahead, I've not yet decided which one is going to materialize. So either we get a more imminent collapse, or we get a 2-odd-year breathing space before the collapse. So, next question.
Yeah, so much to unpack there. Thanks for laying it out. So you said you've seen the weak economic data coming through. Is that sort of employment? Is that, I guess, retail sales? What are you seeing?
Well, first of all, the employment data is beginning to, the official employment data, the BLS data, is weakening and matching what private sector surveys have been showing. So that's one part. The second part is that ever since Arthur Burns in the 1970s, the CPI data has been manipulated deliberately in order to slow down, reduce spending for pensions, etc. There's one person that I follow who's tracked all of the data prior to when Arthur Burns started meddling with the numbers. And his conclusion is that last year CPI was 10.8%. Then I read a report, which I believe was rapidly deleted, that Larry Summers and his team took CPI back to 1983 and concluded that CPI last year was 9%. Now, if you look at what households have been seeing in their weekly and monthly bills, you come back to this around the double-digit number. So if you use the real data, the US economy, the US consumer spending is so much weaker. Last year, consumer spending in nominal terms was 3%. So where are we today? So you've got July vegetable prices rising by around 35% month on month. If you look at global food prices, as published by the FAO, July this year compared to July last year was 7.6%. And from the numbers that I've seen, that it's likely to be rising for the rest of this year. So despite everything that the Fed is being forced to cut rates, I think quietly they were very mindful of the inflation trend, which is not going to get any easier once the impact of tariffs hit US consumers. So I think if one looks at the pressure that the Fed is on, whether it's right or wrong doesn't matter, but it will have unintended consequences. I go back to what the recently retired general manager of the Bank for International Settlements said in his farewell speech in Tokyo in May this year. There were two messages that he gave. The first one was that debt cannot continue to rise faster than global GDP. And the second one was central banks should stand up and not when their economies get into trouble, lay out the put, i.e. support for the troubled economy. Now, my guess, and it's no more than a guess, that as Powell is the senior central banker, I wouldn't mind betting that Carstens, the BIS general manager, spoke to Powell about what he was going to say. And thus I suspect this is one of the reasons why Powell has been reticent in cutting rates. So we enter another different scenario with the Fed being even more politicized than it was before. What is that going to mean to the US economy, to inflation, to the dollar? And what does that mean for gold? I mean, increasingly, people want fixed assets, not paper fiat money. Central banks now have more gold reserves than they do US treasuries. That's telling you something. I mean, this all comes back to how I started by chatting about the SCO meeting, which if you align the SCO to the BRICS group of nations, what will evolve at some point in the future is a BRICS currency. And the betting is that that currency, one way or another, will be supported by the gold that BRICS member countries own. I mean, China, everything that I've put together over the years, helped by Alistair MacLeod, is that the total gold, physical gold in China is around 50,000 tons, half of which is owned by the government and half has been bought from the Shanghai Gold Exchange by Chinese institutions and households. I can sort of confirm that government figure as a senior executive in a major Japanese company told me over lunch one day that 40% of my revenue comes from China. This is about 5 or 6 years ago. And therefore I have to know a lot of important people, one of whom was a senior PLA general. He invited me down to headquarters for drinks, which began at 4 p.m. And at around 6 p.m., he tapped me on the shoulder and said, "Let's go for a walk." So we walked across the compound, came to, I'm paraphrasing what he said, and came to a large warehouse. And when the doors opened, my jaws dropped, he said, because there, stacked from floor to ceiling, were bars of gold. So, and then Russia, from everything I pieced together, Russia has about 12,000 tons, nearly all of which is owned by the company that supports the central bank. Both Russia and China produce, I think, something like 300 tons a year. So the gold stays within those countries, both countries. So that's what BRICS is going to offer is a gold-supported currency. Thinking out of the box, and it is only that, what might America do? I go back to an old friend who's now passed away, who about 10 years ago was a senior executive in a major international financial institution based in Washington. And he half jokingly said, "Simon, one day America is going to have $2, a domestic dollar, which will be supported by gold. The international offshore dollar will be allowed to find its own level, which we have, according to our technical associate, by 2028, around, with the DXY around 50, basically, broad terms, half of what it is today." So, what does this all mean? In my view, one should discard long-term investments, given the fractured state of the world's financial and economic and economy, that one should play the short-term moves, one should secure one's future by having gold, and by seeing that one's deep freezers are always full of food, and that if you have a garden, see that part of the garden is turned over to a vegetable patch. Voila.
Thanks for unpacking that. And as you said, gone to this phase of the relationship between BRICS and the relationship that we're seeing with Russia, China, and India, which doesn't seem like a natural alliance, because obviously there's been lots of tension historically. There's been lots of I guess wars between the countries. So do you think this is something that can hold together? And I guess that's the one thing that people question: can this sort of tri-alliance?
Yeah, I believe so, because Trump has thrown Modi into being a robust member of BRICS. As I said before, he was playing a 2-foot dance. Now it's a one-step, quick step. They are each complementary. And I suspect that Russia has been acting as an appeaser between the two sides, two countries, to bring China and India together. And certainly the body language at the SCO meeting was very positive. We will know more as the days unfold as to the back chats. But given America's stance, I think China and India's relationship would only strengthen. What it really comes back to, which is really the big global picture, is the growing conflict between the unilateral world led by America, the multilateral world led by Russia and China. The Ukraine war and the Middle East conflicts are all part of this battle between the two views on the future of the world. My guess is that resolution will only be found if America decides to join the multilateral world, which on current thinking is unlikely. If that doesn't occur, then it's going to mean conflict, war. But war probably both sides agreeing that a nuclear confrontation would serve nobody's interests. And wars can take different contours. Wars can be financial and economic. That's really where we are now. Every attempt by China seems to be repulsed by Washington. And it's been clear for some time that Washington's primary objective is to strangle China's growth. I think there is a real fear in Washington that China's super competitive and efficient manufacturing supply chain is only going to get more competitive as they have been using A1 industrial robots to make their manufacturing supply chain just even more efficient. There are already factories in China, one in particular I know of, producing a smartphone every minute with not a human being anywhere near the factory floor. Humanoids. And that's how, over the long term, China's slowdown in its manufacturing labor force, this is how they have planned to mitigate the losses due to the falling population and the percentage of the labor force to the population. I think there are other reasons too. So I hear China has produced and is using apparently very efficiently unmanned submarines. Scary. Yeah. So all reasons why Washington wants to strangle China.
What do you see happening? Because I think there's lots of people thinking that obviously China invading Taiwan is an option in the coming years, at least 5 or 10 years, especially during Xi's lifetime. How would that impact? Because I imagine there'd be I can't see India I can see Russia maybe supporting. I can't see India supporting. Do you see that as a potential wedge, or do you think it would be more covert, like what they're doing with sort of buying Russian gas?
First point I'd make is China does not want to invade Taiwan. It would only invade Taiwan if America placed offensive weapons in a significant quantity that would endanger China's mainland. It's always been their policy that we can do it through friendship and diplomacy. And there was always 2028, I think, was the year when many years ago, the leadership said that's when Taiwan comes back into the mainland. So, bottom line, China is not going to invade unless China itself is threatened by America positioning offensive missiles on the island.
Okay, thanks for explaining that. And as you said, this has really benefited sort of real assets such as gold, and it does seem that that's something that's it's obviously drastically increased, and it seems to be it's linked to your inflation. It's the fact that the currency is massively devalued because of this covert inflation, and gold is sort of the way out of that. It's a way for these countries to diversify, but it's also ways for the average person to protect their wealth. So I'm guessing you see this continuing into the future.
Yeah, though I think that in the short term, like over the next 3 to 6 months, we are going to have a pretty vicious bear market rally in the dollar, which would then cause a correction in the gold price. But that's only a short term. I mean, we could see gold prices 2,800, that sort of level, at some point over the next 3 to 4 months. And then you're moving into the next high ground, whatever it might be. I'm not going to try to forecast the gold price.
Yeah, it's definitely hard to do. But yeah, Simon, thanks so much for your time today. We've sort of covered so many important topics, which I think the sort of viewers will find valuable. But my last question is, what is one message you want people to take away from our conversation?
Don't be the last guy on the dance floor when the music stops.
Perfect message. So thanks again. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Yeah. Simon-hunt.com.
Perfect. I'll put it in the description, but thanks again for your time.
Thanks for having me. Cheers. Cheers, Anthony.
Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right. Thanks again.